Welcome to Trading Capital's exclusive analysis. In today's video, we're discussing natural gas and a useful indicator and tool that I think all investors and traders, specifically traders, need to be using on a daily basis. So, discussing nat gas daily chart, overall nat gas was down today. It was up. It was all around, and it kind of closed just flat in the session, but eked out a small gain of 0.42%. Now, on the weekly chart of nat gas, you actually had another down week on the session. Now, the question is, are we just having a 2-week pullback like we did here? Or is this going to surmount to more and lower price action? To be honest, I think it's actually going to lead to a little bit lower price action just in the near term. But I do think that we're likely going to get a very, very big bull move that could occur over the next couple of months. Now, why do I say this bull move is going to occur? Well, specifically, look at this bullish golden cross that is about to happen. This is showing that the medium to long-term trend is finally starting to reverse to the upside. This makes the scenario of nat gas pushing higher much, much more likely. You look back through golden crosses across no matter what stock, it could be a consumer staple, a tech stock, communication, financials. This golden cross technical setup likely dictates higher price. However, if it fails, if the golden cross fails, you get a very, very big move to the downside. So now how will we know if it fails? Well, the question is, you don't really want to see price action lose this daily 200. After you get the golden cross, you want to see nat gas hold that daily 200. So that is what I'm looking for now. Now in the near term, I do think we can go a little bit lower. That's typically what happens when you get the golden cross formations. Institutions know, retails are loading the boat because they think it's going to go right up right away. Often a lot of people get shaken out when they see it going down 4 or 5%. I mean, if we simply retested the daily 200, that's about a 10% drop in nat gas. And a lot of people are playing Boyle. A lot of people are playing KOLD. So that's a 20 to 30% potential correction that still could ensue in the nat gas price. Now, full disclosure, I don't have any positions right now in nat gas, but I am looking to go long once it retests the correct level. I think the daily 200 is a safe bet. If we had a nice flush into that vicinity, I do think that is a good risk to reward entry on the long side. Now, the only thing we have to keep in mind is that weekly trend. You're still technically putting in high, lower high, lower high, lower high, lower high. So this could be a failed breakout out of this downtrend, which means that we need to watch it very, very carefully. So all eyes on nat gas because I do think there's an opportunity setting up. Now, the indicator that I want you to explore using, and don't take it from me, it's called this prior day low. So if you search your indicator and you go to your prior day, type in prior, P-R-I-O-R, I have it already favorite, prior day and pre-market high and low. So that gives you the prior day high and low of the session, and you can clearly see for nat gas, the prior day high, and let me just erase these moving averages just so we can clearly focus on the level. So the prior day low is marked in purple or pink here, prior day high is marked in 301. Look at the support of the prior day low today. Bounce, bounce and hold. So you can clearly see as an example for traders, prior day low is a very, very good support and resistance level. Now you don't believe me? Well, let's look at the S&P 500 today using that same indicator. Look at the resistance, prior day low, rejection, failed breakout, big sell, rejection late into the session. It's just time after time, prior day low and prior day high acts as a really, really big area of resistance for traders. Notice how if you shorted prior day low, you would have made money. Take a look at NVIDIA, same sort of thing. Prior day low, tried breaking out, got rejected. Look at that beautiful, beautiful short. So time after time, we keep seeing this prior day low and prior day high working in favor for traders. And I must admit, it is something that you need to at least look at and be aware of going into every trading market session. Then you take it to the extended hours, and you can clearly see you get two more pieces of data. You get the pre-market high, and you get the pre-market low. Take a look at how we kind of just teetered on this pre-market low. So again, every time you get rejected at prior day low, often that's a good short setup. Every time you recapture it, often it's a good long setup. So just be aware that this prior day low and prior day high can obviously help your trading abilities very, very immensely intraday action. If you found this video useful, please give it a like down below, and we'll see you on the charts a little bit later.